All righty, welcome everyone. Welcome to the Hurley Investments Market View commentary for the 22nd of July. I missed last week unexpectedly, so I have 2 weeks of information to go over. We will probably spend the whole hour together tonight. With that said, out of curiosity, if I was to ask you what's happening, if I was just to ask you what's happening in today's market, what would you tell me? I'm looking for some answers on some things. What's happening in today's market? Okay, first of all, we have, and I love that one, lots of volatility. So what's causing our volatility right now? If we're going to talk about lots of volatility, what is our volatility? What's causing it? So there's a couple interesting ones, right? Everyone seems to be focusing on let's call it political uncertainty. Now, out of curiosity, the VP is Vance for Trump, and we already know that Harris is, well, it's interesting. I'm going to write it down, then I'm going to go to it. Harris is the got to get that out of the way so I can see. Is the candidate for the Democrats, but not elected / chosen democratically. What do I mean by that? If I'm sitting here and saying, hey, she's the candidate, it's pretty interesting because I have a very interesting article. Need to get down to it. Amazon sellers, Berkshire. Ludicrous. Donors leave called Kamala Harris frustrated and annoyed. About 300 major Democratic donors left, many who dialed in frustrated, with one donor declaring it ludicrous shortly before it ended, according to two sources. One person on the call referred to as mismanaged and rushed. They added that expectations has not been managed well, and some participants left feeling admonished. The disappointment. Well, how do I say this? The campaign should go through their process for electing their candidate again. And that didn't happen. Everyone wanted Joe Biden out, but they thought that the process of having another candidate and the choices were not there. The nominee was just Kamala Harris, boom, she's taking over. So I don't follow the Democrats organization, but to a certain degree, it seems like the Democrats got what they wanted. Biden is out, but they did not get their political process to be nominated. Thank you. Jim Kohler's helping me out. They weren't nominated correctly. It was just, oh, this is our next candidate. So obviously that was a concern. And it also might be a concern. First assassination attempt since Ronald Reagan. And I don't know if you remember, Ronald Reagan took a bullet to the chest. Took a bullet to the chest, made it through it, obviously. But boy, as I'm looking at things and how things were run, as I listened to shots, head of Secret Service, she's probably going to lose her job. And that's, I don't know. I'm a little shocked that from 400 feet away, we don't have counterterrorism positions in place to protect potential candidates for president, right? So a little shocking, super shocking that we had a first assassination attempt. Okay, let's go through. There's some more things here. We haven't gone through very much earnings yet. I think it's only 13% of the S&P 500. So 13% of S&P 500 had earnings, with 80% beating, but 30% come, it's more than that. Does it come this week? And 30%-ish more next week. The rotation out of tech into, anyone know where did the rotation go to? Out of tech into what? Any idea? We rotated out of tech, but what did we rotate into? You guys got it. I just can't type as fast as you can. Now, great question. Someone just asked, how do you measure that rotation? And so on that rotation, I'm primarily following Bloomberg and CNBC on their stats on the 10 sectors of the S&P and where money seemed to go to. And it kind of went in that order: small caps, energy, healthcare, and finance. So I am following Bloomberg and I'm following CNBC on their reporting. Now, I think it's kind of funny because small cap, what is small cap going to, what's the big push for small cap? How is small cap going to be making money? So stronger economy is typically how it is, but we're not in a robust economy. In fact, if anything, it's slowing down right now. Where does small cap going to make their money? And if you don't know, go ahead and just type a couple question marks in there. So small cap are usually the lower stocks, right? Excuse me. How did I say that? Small caps are the smaller companies. They're the upcoming, right? So let's small caps, IWM, Russell 2000 index, small companies with huge potential growth, right? And the thought process behind small cap companies is that because they're small, they have to borrow money. And because they borrow money, and I should say borrow money, how did I say that? Borrow money to fund all aspects of the business because they can't afford it yet. But because they do that, the understanding is that they are much more sensitive to interest rate hikes and cuts. Where an interest rate cut for a small cap could make or break their year. So that is the idea behind small caps, why it literally went up 5% in one day from, geez, 211 to 223. You'll notice it's pared back a little bit because there is no guarantee that we're going to have rate cuts or significant rate cuts. It was up nicely today, but small caps and the big push into it, usually the small caps seem to run from the beginning of the year until about April. And those are usually the highs for the year. So a little, I don't know, a little interesting that things are being pushed that way. All right, couple more things you said. Earnings. Big movements. Next 2 weeks. And last but not least, a rebound coming, can't spell today, I'm sorry, coming off overbought. So if we take a look at our charts, the Dow is bullish and overbought, and we corrected pretty quickly in 2 days. The fact we had a doji today is quite positive. We had lower lows from our open, and we made them back up. That is what that little cross-looking symbol looks like right here. Typically called a doji, typically is a reversal of trend. That would be nice, but that's only about a 50% accuracy. But we just came off of being overbought on the Dow. On the S&P, looks very similar. A couple people asked, and I'll go over a couple positions, but a couple people asked why we had a couple positions not protected. We saw overbought on the S&P, and I'll highlight that right up here. But we have the 50 median line holding. So technically speaking, we have a support level that's working on the S&P 500. And then unfortunately, For the NASDAQ, the same thing happened. Overbought. It looked like we were holding the 50 line, and we did come back off of it. It's just interesting that I feel we had a technical correction. A lot of people were talking of a rotation, and the numbers did warrant that. If we're looking at a couple big Mag 7, Meta dropped from 540 all the way down to 460, $80. Quite a drop, quite a rotation out of it. Now, interesting, volume slightly higher than average, but that was definitely a sell-off on Meta. Let's take a look at a couple other ones. I'm just going to go in order because it seems to be easier that way. Amazon. Boy, did they blow it with their pre-Prime Day. I've got an article on how they messed up and had a glitch. Not a CrowdStrike glitch, but 200 down to 180. There's a 10% drop. CrowdStrike. Ugly. 390, 400 actually. Let's go 400 down to 263. $137. I think this might be an interesting opportunity down the road on a leap long call. All right. Apple. Apple weathered the storm very well. 235 to 222. Seems like more of a 5% drop for Apple. Not too bad. Google L did great. 192 down to 178. Not bad at all. Tesla held in very well. 270 down to 240. 10% drop. Netflix, 701 to 635. About a 20% drop there. 635 cent, about 10%, excuse me. 10% drop on Netflix. And of course, Nvidia. Nvidia went from 135 down to 15. So Nvidia was one of the bigger ones that were hit. Meta was the worst. And simple rotation running through. All righty. Let's see what else I have for you. I think I got everyone's comments there. Presidential, bullish because of the hope of Trump running, I think. So yeah, if I went and said that comment, markets will seem bullish on Trump tax breaks. That's where You could see it. With that said, though, the flip side, tariffs can hurt the markets. And we've seen that with ADRs in China and anything that had some type of Chinese manufacturing. So it is a two-edged sword. All right, going through. Okay. All right, like where we're sitting at right now. Taking a peek. All right, so here we go. My concern is a recession. Earnings will tell a lot. And it's just a matter of going too far, too fast. We have GDP and we have the GDP deflator. These will both happen on Thursday. Highlights. With the third estimate, Q1 GDP was revised up to 1.4 from the 1.3 consensus. And personal spending growth was revised down to 1.5 from 2.0. The GDP price deflator is revised up to 3.1 from 3.0. So here is the short answer. Looking at this in plain English, the GDP is at 1.3. Our growth of 3 to 5% sucks. We're not there. Personal spending is getting hit with inflation. And personal spending was revised down net 25% from 2.0 down to 1.5. When we talk about a GDP price deflator, a lot of people ask me, Kevin, what is the GDP price deflator? The easiest answer to take away from that is it deflates the GDP. Your GDP number should be above the price deflator. The key factors all come down to the causes for a recession. Personal consumption was revised down. PCC inflation contributed 0.98 points. The gross private domestic investment was up 4.4. Exports increased. Government spending increased instead of people. Real final sales domestic product increased. Personal savings rate was at 3.8, rather high. And our inflation increased positive 0.1%. The key takeaway from the report is that it is dated, so its impact should be limited. However, the slowdown in personal spending is noteworthy in light of the anecdotal evidence and the intern that suggests consumers in aggregate are reining in their discretionary spending. It's interesting because let's see if I can get flights were returning to normal. Cruise ships have higher booking numbers. national parks have an increase in foot traffic. Things seemed to be moving the way they were supposed to. So if I'm going to ask the question, where is the problem that is causing people to spend less? What's the problem? If we were going to look at it, where is the problem for people spending less? I like a couple of these that have come in. Higher debt, which equals to running up credit cards. Another one, running out of savings. I'd agree 100%. Job losses, inflation on goods, and really it comes down to food and gas, right? That's still high. Makes me wonder. I mean, it's been a while since I've been to a restaurant until the last week or so. Holy crap. Cost me $130 to feed 5 kids, myself and my wife. We're getting conflicting data. I would have thought that we were going to go through a, how would I say this? We're getting conflicting data. I thought we would have had a down month. And I'm now looking to having to change my downward expectation to a positive expectation. I don't think we're going to get, there should be no rate hike in July. Not going to happen. But I do think there's a very good possibility we're going to have a rate cut. I just said a rate hike. There's no rate cut in July. Very likely we're going to have a rate cut in September. My worry is it would affect the election. But if we now have Kamala Harris in, and I don't know how to say it, what I saw coming our way has changed. I don't see the same things coming where a rate cut during the election might sway it one way or the other. I did before if Biden was running. I'm not sure I see it the same way right now with Kamala Harris. Okay. The big picture. The Buffett indicator is playing with fire. I'm just going to go down to what it all means, right? Markets can stay overbought longer than one might think. The reverse holds true, that they can remain oversold longer than one might think too. The Buffett indicator at this point, however, doesn't connote a market is in an oversold position. It does suggest it's overbought and more directly overvalued. It is just one indicator, so it shouldn't be taken as an isolation as the be-all, end-all indicator for investment decisions. What Buffett indicator connotes is the valuation risk at the index level is greater now, then one needs be discerning and allocating money to the market as well as other individual stocks. So the short answer that we're being said is right now, with the movement of our market year to date, the market is more expensive now than it was in January? The short answer is duh. Well, Warren Buffett has a lot of cash. The short answer is duh. The question that we're coming up to is, was last week's 1.96% S&P and the NASDAQ being down 3.65, is that enough of a correction to make our markets look cheaper? In all honesty, I think stocks are going to have to go higher based on their earnings. With that said, Verizon. We do have people in Verizon. Verizon met the earnings per share, and I have all that good stuff written down. Verizon is supposed to come in at $1.15 versus an estimate of $1.15. So it hit it just fine. But revenue came in at 32,800,000,000, which is ridiculous. That's billion versus an estimate of 33,048. So they basically missed it by $250 million. Missed revenues by $250 million. I have not gone through their guidance. I haven't gone through their numbers. I haven't gone through their earnings call. I'm going to do all of that, so I'll talk about that next week. But I did find it rather interesting. Our Mag 7 stocks, we took profits and rolled long puts lower. That primarily comes from NVIDIA, Google L. With that said, we do have some earnings coming up this week. Let's run down to them. There's our earnings list if you want to go over any of them individually. Someone once asked me, Kevin, why do you put so much in there? I put so much in there because any ones that I list for earnings, I'm going to look at and see how the stock reacts. Okay, let's see. Cliff Natural, Nucor, Verizon, and Zions Bank today. Freeport McMoran, Philip Morris, UPS, Financial. I can't remember that one. Visa, Coke, General Motors, Google, Tesla on Tuesday. Tuesday after the market close, we'll have some big earnings that'll most likely move our Wednesday futures. Wednesday, AT&T, CME Group, International Paper, Chipotle reports, IBM, Valmont, Waste Management, Whirlpool. Thursday, American Airlines, Love, which is Southwest Airlines. We're going to find out not how CrowdStrike affected them a week ago. They might give softer guidance and blame the CrowdStrike faux pas, but we're going to see how they did previous to the CrowdStrike mishap on their uploads. Honeywell, Valero, Juniper, SkyWest, 3M, and Bristol Myers on Friday. This week is existing home sales on Tuesday, new home sales on Wednesday, GDP and durable good numbers on Thursday. That will affect our futures. Friday, personal income, personal spending, and the PCE numbers. If the PCE numbers come in lower you'll most likely see the markets head higher. I doubt they're going to come in lower. If they come in meeting or even a little higher, you might see a panic on Friday. Thank goodness we are protected. We're pretty much protected across the board and everything except for NVIDIA. All right, taking a quick peek at my notes. All right. Triple whammy threat for building for U.S. stock investors. A strategist warns. Yeah, it comes from a nobody, just to let you know. But Sherrod Capital's market strategist Bill Blaine warns that we have a triple it's triple whammy threat. Overvaluations on over euphoria, misunderstanding of the economic reality and the political aspect. In plain English, overvalued stock market, a misunderstanding of how the stock market and our economy works, political uncertainty. Some of it we may have taken care of with the drop last week. The short answer, overvaluation. Our market moved too far too fast. Misunderstanding the economic reality. There's a lot of money on the sidelines that's being pushed in. We don't even know who the vice president might be for the Democrats right now. It's a scary scenario looking at things. The short answer is we might be running protection through August, September, and October for news events. I had this article sent to me. Disney's still missing the magic. Just to give you an idea, they are focusing and beating up on the on Disney Plus versus Netflix. Their numbers don't add up. The whole Disney Plus runs the whole earnings. We're past that. We are completely past that, and it's a small portion of their business, especially when they just had their billion-dollar movie. So it's an interesting article that beats up on Disney. It somewhat shows in their charts the opposite of what they're trying to say. They're trying to make a direct comparison to Netflix, but the reality is when you read the last little bit, they do have a bull thesis. I'm going to highlight the bull thesis because here they tear them down and say they're blowing it. Then they say, or we could be wrong because they're cash king, which pushed them up to $200. Looks really good coming out for this year. Inside Out, $1 billion. I'm curious to see what Deadpool and Wolverine will do. 500 million would be very interesting. Mufasa the Lion King could be $1 billion. Captain America Brave New World could be $1 billion. The Fantastic Four could be $1 billion. So they've got some good things coming down the slate that would be their cash cow. Amazon sellers lose coveted buy box ahead of Prime Day after Target discount snafu. It just wasn't CrowdStrike. Amazon blew it for their Prime week. Please feel free to read through it. Berkshire has eliminated 10% out of outstanding shares as Buffett values the enduring power of buybacks. If you want to understand buybacks and what the benefit is for companies and why they're doing it, this was the most simplistic article I found in a while on how it artificially inflates the price. Please read through this. Read through this on My Hurley Investment. It'll be a great article to understand why buybacks are so important. Vance's Trump's picks, snubs Rubio and Burgum. Burgum will probably be as the Department of Justice head anyway. JP Morgan's J down warns inflation interest rates may stay higher longer. If anyone would know, they would. I do believe it'd be interesting to see if Powell is just giving into the thought that they're usually $1 short and a day late. Powell indicates Fed won't wait until inflation is down 2% before cutting rates. Another good article on how the Fed never gets it right on time, so they might try to catch up and not miss it this time. Again, please read the article on how some of the big 300 Democrat donors did not like the political process of the nomination of Kamala Harris. With that said, are there any questions you guys have that I can answer for you? Yes, for the most part, we're protected on the majority of our stocks. Today, we did take a profit on NVIDIA and Google puts, rolling Google puts out and down in strike price and just taking profits off of NVIDIA. But what questions that I maybe have missed last week or that I need to go over today that I can answer for you? What's happening with Disney? Must be institutional selling because it is relentless. So Disney broke a major support level. And I think the reason Disney broke these levels, as Netflix reported. Do I think it's justified? No. And we're back down to the lows of January. We're also approaching a death cross. They were getting everything right. Their last earnings was a slight disappointment, but it takes time. It's not big selling except for their earnings dates. So it's not like we're having huge volume that we need to be worried about. But we broke a huge support level at $96.50. We're touching the lows, 6-month lows of January. We are oversold, which means we could see some bigger money coming in. And the short answer is it correlates 100% with breaking this support level and the 4 days down with Netflix. And Netflix earnings did not help out Disney. The problem is it's an oranges to apples comparison. Netflix is not Disney. The Netflix version of Disney is mired in that's one of their divisions, their media division. ESPN's been doing better. Their movies are doing better. I think some people are also worried that when inflation and unemployment ticks up, how that affects people visiting their parks. In all honesty, it costs a small fortune. If my family is going to go to Disney, it would basically be about $2,100 to get a 2 or a 3 day pass. So we're watching Disney. I don't understand the connection between apples and oranges for Netflix, but Netflix the best of earnings and subscribers. So possibly that means Disney won't have that with Disney Plus. The problem is Disney Plus is one of 4 segments, and in that Disney Plus is also the movies for the entertainment or their media, and they just hit their first $1 billion movie with Inside Out 2. That should significantly increase the earnings and revenue for Disney this quarter. Maud, did that answer your question for you? And Maud, should I also just call you next week? What other questions do we have? Perfect, I'll do that. Perfect, Stuart, thank you. Yes, go to Apple. Apple is expected to continue a super cycle. What a run Apple has had. I don't know if earnings will look really good. It comes after their WDC announcement. Have they done enough AI? The short answer is I don't have a great answer for you. It's a remarkable run. We're protected at 225. We'll run earnings, which I believe is on August 1st. And if we get back up to 235, we'll be rolling those 225 puts out in time a week or two and up to the 235 mark. Little surprising. I don't see the growth opportunity in Disney right now. I can't calculate the I can't calculate as high as they are right now. So with that, I'm just I'm sitting back and I'm being patient. But boy, we had a heck of a run, no puts in place, and ran from the 170s up to the 235s. I guess we did have puts on their previous earnings. So that, yeah. So short answer, I can't calculate the growth for Apple. Yes, we still have some positions in, but we've rotated money out of Apple over to NVIDIA to Google. Basically, Apple went over to Google, and we've also had an amazing run in Google. So please don't think because we left Apple and it had a run up that you've missed the boat. We went from can't get this down. We went from the 130s up to 181. So we have had a $50 run there too. Good question. Are there any other questions? Any other questions you guys have that I can answer for you? Or that I should have answered already and I just missed it last week? Earnings will move our portfolios the next couple weeks. Everything is there, and we will most likely put some protection back on NVIDIA for the PCE prices, but we have a really good 50 that it seems to be holding for NVIDIA. Your view on First Solar? I think we are past the runs on solar panels. We're not getting the same amounts of credits. I would not be buying into First Solar anytime soon. First Solar, I would look at them after the election, depending on who wins the election, to be 100% honest with you. So short answer, it's run its course. We don't have the same tax credits to keep using to get them. And I would not be looking at First Solar as a as a growth stock or an opportunity at this time? Perfect. All right, guys. Hey, I appreciate you being here. Again, my apologies for last week. Got caught by surprise as I was traveling. So forest fires happen out in Utah quite a bit. We actually have a big one right above the state capitol with homes being evacuated, and nothing serious per se right now. We just deal with the fires as some of you guys deal with hurricanes and tornadoes. All righty. Appreciate your time. Thank you very much. Look forward to seeing you guys next week, and I'll get this posted hopefully by tomorrow morning. Have a great night, everyone. Bye-bye.